Welcome back to Market Fatafat. So let's keep it going with all the buzzing trades then. But before that, let me welcome on board Shivangi Sarda of Motilal Oswal joining us on the technical front. Hi Shivangi, very good afternoon. And thank you so much for your time. But before we come to you to know your first stock, let me just quickly highlight what's happening with Global Health, that is Medanta. Because this time, Vinny, the numbers were not that great because the company did announce a lot of capacity additions earlier. So a lot of these things were actually focusing and impacting the earnings of the company as well. And for Medanta, even the analysts were not taking the results very positively. For today, Jefferies has come out with its note, not a great set this time around, and they are actually not happy because they have gone ahead with a downgrade rating on this counter from a buy rating earlier. They have downgraded it to a hold now and have also cut the target price to 1400 rupees versus 1470 rupees earlier. Now Medanta is seen to be disappointing in a big way in Q4, and the margins have also seen a dip on the lower occupancy in their Lucknow facility specifically. The new projects are on track, but the key approvals remain, and the Lucknow and Patna ramp-up is expected to continue. We did speak with the management as well, Winnie. So just let's go across and hear out from the management of Global Health.
We're adding in beds in Lucknow and Patna as well. And we continue to invest heavily in hiring very exceptionally talented clinicians across the group. So in all things, track. Our Noida facility, which is supposed to open towards the end of this year, is also on track, and that should bring on an additional 550 beds by the time that hospital is fully operational. This is in line with our stated strategy of making sure we focus on quality, driving growth through volume. So if you look at our volume growth across the year, up about 14%.
Okay, let's move on to the next one, and this is coming in from the metal packs from Shivangi. Shivangi, good afternoon, and Hindalco is the first stock that you picked out for us today. What is the target that you are keeping for Hindalco? Where should one see Hindalco moving? Today it's buzzing in trade. Even in the last 6 months, when you look at it, 36% return is what we're already seeing. What's the target that one should keep?
Good afternoon, and thank you for having me on the show. So we have seen that Metal Pack is in entire full in action, and Hindalco has been a stock which has been on the run from the last 2 months. In fact, it's given a Poland flag pattern formation breakout on the weekly frame, and the consolidation cluster that it has come out of is now indicating that a good up move could be expected from here. Interestingly, we've seen that the stock was muted from the last 5 sessions, and a good breakout can be seen over here today. So this power and momentum is going to extend to 720 and then positionally to 750 levels. 680 would be a crucial support to watch out for.
Okay, surely keeping an eye out on Hindalco. Let's move on and talk about Jyoti CNC. That's a stock that is in focus after they reported its numbers. Revenue saw growth of only 1% when you look at it on an overall year-on-year basis. While in terms of overall the EBITDA performance and the operating performance, yes, the company managed to see a good performance on the operational front. So yes, EBITDA saw a growth of 59%. Operating margins, that's the EBITDA margins, came in at 29.7% versus 18.8%. The management also said that, when we spoke to them, that they expect this margin level, to be around this range of 29%. So that's very interesting to watch out for. And last year we had seen that 100 crore versus 70 crore in the base quarter was an exceptional gain. So yes, keeping an eye out on that. All in all, today Jyoti CNC a bit subdued in trade, down 2%. But yes, that's the highlight coming in from Jyoti CNC.
All right, moving on, let's talk about Traxcn Tech. Snehi, take us through how are the earnings this time of the company?
Well, Shrishti, a weak set of numbers coming in from Traxcn this time around. The stock is also reflecting how the earnings were. And let's take a look at what these numbers look like. Revenue has come in flat at 20 crore rupees. It is the net profit that is ailing this stock in today's trading session, because that has come in at 1.43 crore rupees versus 24.5 crore rupees this time last year, which is a very steep fall of 94%. EBITDA has also come in very flat at less than a crore, at roughly around 60 lakh is where the EBITDA has come in at, and EBITDA margin is also where it was this time last year, around that 3.3, 3.4% levels. So flattish moves coming in, not much happening in terms of growth when it comes on a YOY basis. But it is the PAT that is spooking the stock today, because that has seen a downfall of 94%, and on the back of that, the stock is lower 8.5% as we speak.
All right, that's about Traxcn Tech, but let's move on, and Ankita, take us through the earnings of ONGC.
Well, yes, ONGC reported a rather good set of numbers. In fact, it was above what the street was penciling in on a standalone quarter-on-quarter basis. We saw, the revenue come in at 34,637 crore rupees, and we also saw an uptick in EBITDA, which was of 1%, and the EBITDA margin also came in at 50% versus 49%, a marginal uptick, but better than what the street was penciling in. We also saw, the company announce a final dividend of 2.5 rupees per equity share of face value 5 each. Now we are seeing the stock whipsawing in trade today. In fact, the stock did see some profit booking in the beginning of the day, plummeted 1%, and then regained the momentum and is now rather flattish, but trading with gains of 0.2%.
Sure, that's ONGC, but Shivangi, seems like metal is something that you're really liking, because Tata Steel making your list as well. So similar chart patterns that one could expect to Hindalco then?
Absolutely. As I said, that there has been a lot of tailwind from the metal pack, and Tata Steel is also showing good amount of volumes being added over here. Now, its previous hurdle zone of 170 has been crossed, and it is holding quite well above those levels. We're seeing that even at these levels, a good amount of longs are being added over here, which will extend the move. Now, if you look at the broader time frame chart as well, the stock has been consistently in an up move from July 2020. So this stock is a strong counter and cannot be ruled out in this up move. We are expecting the next targets to be around 180 with a support of 170 levels.
All right, that's about Tata Steel. But with this, Ankita, coming to you, take us through the earnings of Anupam Rasayan then.
Well, yes, let's look at the earnings for Anupam Rasayan then. On a consolidated basis, the revenue saw an uptick of 36% on a sequential basis. The EBITDA also saw an uptick of 17% coming in at 93 crores versus the 79 crores in the previous quarter. The margins also, however, saw a slight bit of a decline coming in at 23% versus 26.5% in the previous quarter. The net profit, saw an uptick of 68% on a quarter-on-quarter basis. Now they expect the pharma and the polymer segment each to further increase their revenue share in double digits by next year. Also, FY25 will be a year of growth for the company, with their major focus on polymer and pharmaceutical space. That's the word coming in from the company. But right now, we see the stock trading with cuts of 0.5% right now. That's the word on Anupam Rasayan then.
All right, but another result candidate is actually Rolex Ring in this time. The company has reported actually a good set of numbers, because we are seeing a significant jump in the numbers, and that's clearly what the investors are also liking at this point in time. This time the company's numbers were actually seen a jump of 5.5% on a YY basis when it comes to the earnings, but the net profit is actually coming at 23.3 crores. Other than that, if we talk about some of the other internals, then the EBITDA margin has seen an improvement of 116 basis points to 22.7% this time around, while the EBITDA has seen a jump of 11.3% on a YOY basis. So a good set coming in from Rolex Ring, and the stock is clearly cheering the good numbers in today's trading session.
Absolutely. Surely, investors are cheering the good set of numbers there, but yes, keeping an eye on that one. Let's move on to talk about Bal Krishna Industries. What is that doing in trade? We did have Bal Krishna Industries report their numbers. It was a good set of numbers, about what the street was expecting. And we do have a brokerage note that came in this morning from Citi, where they're maintaining a sell on Bal Krishna Industries, but hiked the target price. The new target price is 2,300 rupees per share. Previous target price was 2,150 rupees per share. So surely the good set of numbers that is coming in. Now, on that, Citi is highlighting that the geopolitical uncertainty, that is an overhang on the volume growth still. So that's why they're trimming their estimates for FY25, FY26, and this is despite that healthy number that we're seeing, which is about what the street was expecting. And this is more of a cautious stance stance that they're maintaining in terms of the demand. But yes, other than that, Q4 was a good set of numbers. Maybe going forward, something they're just being a bit more conscious is what Citi is highlighting. Stock, there's no stopping that. It's up almost 9.7%, 9.8% in trade as of now.
Well, certainly a great move in Bal Krishna Industries, but another stock that is sitting at an all-time high level, Shivangi's Coal India, one of the top gainers in Nifty 50 today. Now that the stock is very near to that 500 rupees mark, tell us, what are you spotting on this one?
Absolutely, Coal India is at its lifetime high level, and we've seen that there has been a very good run up from the last 9 to 10 months. The stock has now surpassed its previous cluster zone as well. Now, interestingly, we have seen a volume spike over here, which will add to the momentum, and we've seen that this stock has done good after the spike in momentum and volume even earlier. So historically speaking, the stock is the follow-up action in this stock is quite positive and quite attractive. So stock is now expecting to go around 515 with a support of 480 levels.
Okay, surely keeping an eye out on Coal India there. But on that note, let's just actually quickly mark the numbers that are flashing at the bottom of the screen. Welspun Enterprises reported the numbers. We're seeing a decline in terms of the revenue of almost 3%. The profits of the company also seeing a sharper decline of around 45%. But margins, that's where the improvement has come in. EBITDA margin at 13.5% versus 11.2%, almost a 200 basis point improvement in terms of the margins. But yes, on the top line, bottom line, we're seeing a bit of a weakness. So yes, we did see a fall coming in. Now the stock is trying to make a bit of a recovery. That's Welspun Enterprises, but we'll slip into a short break on that note.
But before that, Winnie, let's actually mark the kind of heat wave that the IMD is also warning about, because temperatures continue to soar across North India. The mercury has once again breached the 47 degrees Celsius mark in the parts of Delhi, and the IMD has issued a red alert for the next 5 days in the capital. In Delhi, despite the mandated summer vacation between May 11th and June 30th, the Department of Education has learned that some schools are still operational. And it's not just Delhi, Punjab, Haryana and Chandigarh are also reeling under a severe heat wave and a red alert warning. In Punjab, the schools have closed with the temperature reaching 45 degrees Celsius, and Nikhil joins in with the latest updates from this one.
Harsh weather conditions are currently being experienced in parts of the capital city. If we talk about the temperature in particular, it has reached to a level of 47.4 degrees Celsius, which is the highest recorded so far for summer season for the year 2024. Back in the year 1998, that means 26 years before, the temperature highest was recorded at about 48.4 degrees Celsius, and it appears like for this summer season it is likely to cross all the previous records. As far as the IMD is concerned, they have already mentioned that the intense heat waves are likely to continue for next few days, and also there is no respite which is expected from the side of the weather for next a week or two. That means similar condition and the scorching heat, this is something which has to be experienced by all the people who are residing in part of the NCR city. The schools in Noida, Ghaziabad, Delhi and Gurugram, they have been asked to remain shut for summer vacation by the state department and the district authorities until further orders. And this is something which is applicable for all the classes, all the boards.
Clearly, there is heat wave and alert, red alert coming in there, but I feel there's red alert here also. At least I'm feeling it, and it's too much rise in temperatures across the country. But yes, on that note, let's have some chilled water and slip into a very short break.
Welcome back to Market Fatafat, and let's talk about one of the other result candidates. And Snehi, take us through the earnings of Dodla Dairy. How did the company perform in Q4 then?
Yes, so let me take you through the earnings fine print. Then quarter 4 revenue has come in at 787 crores versus 724 crores, which is an uptick of 8.5% thereabouts. Consolidated PAT has expanded sharply as well at 46.8 crores versus 22.5 crores on a year-on-year basis. So that's the PAT figure over there for you. Let's take a look at what the EBITDA also came in at. A smart move over there as well, because that has come in at 75.4 crores rupees versus 33.8 crore on a year-on-year basis. And margins have also expanded 9.6% versus 4.7% on a year-on-year basis. Now, we did interact with the management earlier in the day today, and they said that they expect to maintain the double-digit growth trajectory well into FY25 as well. They don't expect price increases in milk for FY25, but they're also pushing ice cream sales going forward. They believe that the value-added growth will move to roughly 31% of the total sales in FY25, and margins will be maintained at the current levels at least, if not more. So, well, that's the entire outlook on Dodla Dairy, and the stock is down almost 5.5% as we speak.
That note, let's also just quickly listen into what the management had to say. They did highlight some bit of a point, but in terms of the value-added segment, let's listen into what their view was.
So we are actually actively pushing our ice cream sales, although ice cream sales as a percentage will do much better than the last year in terms of the growth. But since the base being very small, it won't show a significant uptake in terms of overall revenue growth, because our revenue growth will be substantially larger, considering into consideration cattle feed and Africa coming into play. But also we will have a larger segment of ghee sales that will come into play this year. So that would add a significant number of by volume, maybe almost increasing our top line by another 3-4%, which will translate into 2% at least volume value-added growth. 29 might become 31%.
That was the management of Dodla Dairy, but let's have a look at the bottom of your screen. RateGain numbers trickling in the Q4. It seemed to be an impressive set by the company, and this time the revenue has seen a jump of 40% on a YY basis, while the net profit has seen a growth of 48%, with 50 crores plus profit is what the company has reported in Q4. And even the margins have seen a significant expansion, Winnie, from 17.6% in Q4 of FY23. This time the margins have expanded 354 basis points to 21.1%, and clearly the cheer you can see on the stock price as well. A sharp spike just after the earnings is what we are seeing, and the stock is now up around 11% in trade right now.
Absolutely, 11% uptick is what we're seeing as of now for the charts. Well, this RateGain, good set of numbers coming in from the company. But let's move on and talk about data patterns then. And Ankita, this one also an earnings candidate. How were the numbers for this one?
So Data Patterns is an earnings candidate, and let me take you through the numbers first, and then of course Jefferies also came out with a note. It was a rather positive note, but as we can see, the stock is down and out more than 3.5% in trade. Let's look at the numbers first. The revenue saw a downtick of 2% on a year-on-year basis at 182 crores versus 185 crores. The net profit also the net profit did see an uptick of 29% on a year-on-year basis, coming in at 71 crores. The EBITDA was up 27%, coming in at 93 crores, and the margins also saw an expansion of 51% versus 39% on a year-on-year basis. Now, Jefferies has assigned a buy call to the stock post the Q4 earnings. The brokerage has raised its target price as well to 4,135 rupees per share, and they've mentioned that the EBITDA in the fourth quarter was broadly in line as the higher margins really offset the lower revenue growth. Now, it has a strong revenue growth outlook of 25% for the next 2 to 3 years, with margins being maintained at around 40%. That's the word coming in for Jefferies. But for now, we see some bit of a profit booking coming in on Data Patterns as the stock is down and out more than 3.5%.
Okay, that is Data Patterns for y'all. Surely a one to watch out for, not doing that well in trade, Shrishti.
Well, yes, but another stock that is doing decently well is actually Solara Active, because this counter was up around 1.5% the last time I checked. And there's a news flow as well where its Visakhapatnam facility gets 0 observations and a Form 483 observations from US FDA this time around. And the US FDA has successfully completed the inspection of this facility, which is a multi-purpose API facility in Andhra Pradesh. The inspection established in the site was done between 14th and 17th of May, is what the company did inform. So 0 observations for one of the key facilities of Solara Active from USFD, and it was indeed a positive news flow. The stock did open the day with around 1.5% of the gains, but still holding on to the gains of 0.5%.
Okay, that is Solara Active for y'all. Let's move on, talk about NMDC then. And Shivangi, what is it that you are indicating or keeping an eye out on in terms of targets? Last 6 months, around a 64% return. What's the view?
Absolutely, NMDC has seen quite a lot of action, and this stock has been, the one of the favorite stocks in the last 1 year. In fact, the stock has seen a good up move from the last 3 quarters, and of course the tailwinds from the sector and the economy is also boosting the stock. Now we are expecting a good up move over here. Now immediately 300 is the target that we are looking at, and positionally 350 is what is expected of NMDC. So definitely a buy even at these levels.
Surely keeping an eye out on NMDC, even a buy at these levels. That's the word from Shivangi. Let's move on, talk about Delhivery. This one is in focus, and when you look at it, it reported its Q4 numbers. Not much of an excitement that is coming in post the numbers when you're looking at it. And yes, though they managed to see an 11% growth, but the losses have narrowed down. But what we are seeing brokerages highlight is that they've downgraded. Whether you look at a CLSA, they've downgraded the stock to an underperform from a buy rating, cut the target price to 488 rupees per share. Also, what they're saying is Q4 growth for them was below the expectation of the street. Express Parcel revenue saw decline on a sequential basis, a negative surprise that came in there. And overall, yes, that is what they're keeping an eye on. Morgan Stanley too has cut the target price to 530 rupees, and adjusted EBITDA also for FY25 they've lowered by 29%. So yes, Delhivery street is not too excited at that. Below expectation is what the number came in.
All right then, let's go to Shivangi then. And Shivangi, you're clearly picking up the themes that are really on the roll, and one of them is the railway theme. And from that pack, IRCON is the counter that you are focusing on. Talk to us about IRCON. How is it looking on charts?
Absolutely. In fact, not just the railway stocks, but also the entire travel and tourism pack are in focus, and a lot of action from the last 6 months. In fact. And we've seen that railway specifically has done quite well out of the entire PSU pack, and it is gaining attention and attraction from the last few weeks. So definitely these stocks are looking quite positive. In fact, it was difficult to choose between IRCTC and IRCON, but the chart structure of IRCON is quite positive, and we are expecting a good up move over here of around 320 odd levels immediately, and a support of 295 levels.
Keeping an eye out on IRCON International, still expecting to see some up move over there. But let's move on, talk about Kalpataru Projects then. And Snehi, why have you picked out this one for us today?
Positive news flow coming in for Kalpataru Projects as well on the back of order wins. Now the company has signed 3 contracts with Saudi Aramco worth 7,550 crores rupees, a big amount coming over there as well. The 3 contracts pertain to 3 packages of the 3rd expansion phase of the master gas system network in Saudi Arabia. Now remember, the company had earlier informed on the 5th of March this year that it has received a letter of intent for these 3 contracts from Saudi Aramco. However, it had not disclosed the contract value in those statements, but we now know that amount to be 7,550 crore rupees. The EPC scope of the order includes laying of over 800 kilometers of lateral gas pipelines. On the back of this positive order win, stock is also cheering on, up 4% as we speak.
All right, that's about Kalpataru Project, but a stock which is down more than 5% is Trident. Ankita, take us through the earnings of Trident this time.
Well, yes, doesn't look like a very good set of numbers coming in for Trident. We can see the movement on the stock. It's trading with cuts of more than 5% right now. But let me take you through the numbers then. The revenue did see an uptick of 7% on a year-on-year basis at 1,679 crores. But we did see the net profits were down 45% on a year-on-year basis, with EBITDA also down 18% on a year-on-year basis at 203 crores. And the margins also came at 12% versus 15% on a year-on-year basis. So not a strong set of numbers coming in for Trident, and as we can see, the knock on the stock is trading with cuts of more than 5.5%.
Absolutely, that's Trident for y'all. Stock number 31, and that was the last stock for today. So we are going to be winding down on this edition of Market Fatafat. So thank you so much, Shivangi, Osho, Ankita, as well as Tehi for joining in with us. And viewers, it's a goodbye from Shrishti, myself, as well as the team who put this show together.
If you like this video, then like, share and subscribe to ET Now.